If you lost money today, more than likely you were trading the one setup for life or some kind of setups that was looking for you to aim for the CPI lows that we had today. But in today's video, I'm going to show you why it is wrong and why you are trading as a pattern trader versus actually understanding what is going on into the markets. And I'll show you guys my trade. I'm up on around $11,000 on the day, all live traded, executed in my private community. Before we dive right into the trade, as you can see here, I have my $11,000 on the day on my Charles Schwab account, trade options. The time that we called out the trade, which was 9:47, as well as the chart of the trade. This is a little bit after the entry, but just so that you get the point. Now let's talk about why was I bullish, or why did I want longs when we had CPI. Well, I think 90% of traders got baited in today was this 9:30 opening here on NQ and ES. I'm making myself a little bit smaller. So if NQ on the left, ES on the right. So right 9:30, this is our CPI candle range. So we have this high and we have this high on ES. As the 9:30 opens up, as you can see, NQ takes out the high, while ES does not. Then a lot of people are like, okay, that happened. Let me enter off of the first inversion for value gap. Maybe you took it to P1, went to break even at these lows, and then you just didn't get your CPI low. Or maybe they shorted end of this inversion gap and just shorted the bottom. But I, on the other hand, was not convinced on. I was not convinced on the. Let me turn on this light. Like I'm a little dark. I was not convinced on the short at all today. The reason why I was not really convinced on the shorts is because I thought on a larger time frame we needed to push higher. So yesterday we had this news here, which was the PPI high, which we had left behind. And that was my target for the day. PPI high, an all-time high, sitting a little bit right above us at 0.68. And as you can see on ES as well, we had that PPI high there that needed to be, that was untapped. Then I'm also looking and thinking, where was the CPI bottom, and should this bottom stay? Should this bottom be respected? And as you can see here, we had a bullish SMT with the opening of last night's price action. So the 6 p.m., 7 p.m., we make an equal low right here on ES, while on NQ right here, you see we make a lower low. So we had a bullish SMT. And if we understand SMTs, and you can watch my other videos on the channel where I talk about SMTs, this is a protected low, which means more than likely we should not be targeting that right away. We should be leaving this behind for a move higher. Also, we have this 5-minute gap right here that NQ tapped, and as well on NQ, this was the golden pocket of this whole range. So from the news to the low that we had the previous day low, you can see right here this was our golden pocket move and the previous day closing. So 3 confluences all there telling me that more than likely this should be the low of the day. So going to the market, I'm thinking, okay, if that was the low of the day, where should I long? Right, I need to wait for my confirmations to actually long. Of course, we open up with this bearish SMT right off the open, so I'm not wanting to long right off the open. And what I was eyeing is these equal lows right here. We have a set of equal lows on the 5-minute and the 1-minute. And write this down. I always say to long below lows and short above highs, which means whenever I'm taking out some lows, especially equal lows that are really, really powerful, I'm looking to take longs from there. I'm looking for potential long entry. I'm not just blind entering, but I'm looking for a potential long entry. So I see these equal lows get taken, and I know on ES right here we make a bullish SMT. Now we have a bullish SMT from the low of the day, which was a CPI candle. We have another bullish SMT now on the smaller time frame inside the CPI range. Also, if we look at this, this was at the 0.5 of the whole move as well. So we're sitting at the 0.5 of the whole move, which tend to be a good place to look for potential bounces. Then we had the smaller 1-minute bearish gaps right here. As you can see right here, we have this smaller 1-minute bearish gap, which we disrespected. Our entry was a 9:47 right here. And the reason why I looked for this entry right here was actually 2 reasons. I thought this gap would not get retested, more than likely because, as you can see, this is a breakaway gap because this is the top of the bullish gap, and the next candle closes above it. So I'm fine with just entering with a 20-point stop roughly right there, targeting that PPI high all the way to the top. As you can see right here. And yes, I held through all of this. You may see this pullback, and we held through all of that. Our actual entry was a little bit cleaner. It was actually on the depth, so it was roughly around 9:45.75. We held through all this pullback. Now another thing, if you missed the initial entry, there was another re-entry, and this is the 1-minute scalping strategy I teach. We have good backtesting video you can go watch. That was uploaded, I believe, a week or 2 weeks ago. But as you can see right here, we had a bullish SMT tapping into this 1 minute gap right here. So in Q taps it, yes, it's not. So that would have been another really solid entry. We take an initial TP at this high because this was the current high of the day. So we took an initial TP here and we get a little bit of sell-off. And you're like, Antonio, why did you not try your stop here? Why did you think this is going to keep going higher? And this is where a lot of people got stopped out here. And I was very vocal in my discussion. I was like, I'm not going to close it. I'm going to let this ride. I'm going to let this ride. And the reason being is that when I'm looking at my stop, I'm looking, what is my last key level that price needs to invalidate, right? What is the key level? As you can see on this move higher, we didn't have really any bullish gaps on the 5 minute. We didn't have any major liquidity that needed to be taken out. So you see here, it was just a steady move up. Tell me, more than likely, this still wants to go higher. As you can see, this becomes my new bullish level. Once we got this candle, then I said we can trail our stops right here at 971. Because this bullish gap should not be disrespected. This should keep on going. So I kept my level where it was. I did not adjust my stop loss because I don't care. You guys are focused on the money. I'm focused on the process. I don't care about seeing my P&L up and down. I'm care about taking good trades that I know will work over time, and then the money will fall where the money goes. So for me, I was looking at this 1 minute gap right here. This should be my last levels. As long as this is respected and we haven't made any other levels, I'm going to be good until we made this one up here. So that's why I kept it where it was. I said the best, keep it at break even. And as you can see here, the bearish order flow also was trying to flip. This bearish gap disrespected. This bearish gaps here disrespected. So I knew that we would want to seek higher, and at the same time as we had this pullback, yes was still very, very strong, right? I'm keeping track of yes. I'm keeping track of YM. I'll take a look at YM. YM was extremely strong still. So all the other assets are strong. The lagger should catch up. And that's what it did. It caught up, and then we got our last target, which was essentially the top of the day currently, which was the PPI high. We finally took out that target, which I even mentioned yesterday when we didn't take it out yesterday. I said more than likely we are going to go for it after the CPI news. Now, I do think the CPI low will be a target at some point, but not today, maybe tomorrow or into next week. We're really close to all-time highs, so we will have to see where price falls. One of the big takeaways here, and I told this to my stream too, is stay calm in your trades. If the setup is there, take the setup. Do not fall in love with this easy mechanical strategy, right? People market to you, oh, one setup for life. The mechanical strategies is long term, they never work. Don't just because you see an inversion for a value gap or some sort of trade like that, you just enter just to enter it. Be smart, understand where price actually wants to go, and then look for the setup. Start in larger time frames, understand where the target should be, where we should be heading towards, and then look for setups towards that target. And if you don't find any setups, you just simply sit on your hands and then you wait and you adjust your trade based on that. Hope this video helped, and if you want to see more recaps, make sure you click the links down below. If you want to learn from me live every single day, catch trades like this every single day, click that first link down in the description. And as always, thank you for watching.